Hello and welcome to the Fibonacci free video for Friday, April 5th. This is David, and I want to talk a little bit about yesterday's seemingly out of the blue drop and tell you why. First of all, I don't think it was out of the blue, and why in the Voodoo Mastery Room, we were actually looking to do some buying down at these lows. There's a group of tools that I like to use together in the Voodoo Mastery Room. They are, of course, our Voodoo lines and Elliott wave analysis along with Fibonacci. And they all fit pretty well together. They're all baked in together in the Voodoo lines. But then when looking at Fibonacci and Elliott wave, they really go hand in glove. Elliott wave informs our Fibonacci, and Fibonacci informs our Elliott wave. And the core of the Elliott wave concept is that 3 wave moves are counter trend moves, and 5 wave moves, like we've seen up from mid-March into the all-time high, 1, 2, 3, 4, 5, are in the direction of trend. And while those are the basics, there are some more complex patterns, some more intricate patterns that often turn people off to Elliott wave as a way of viewing the markets. But I want to show you how it helped us figure out yesterday's decline, get prepared for it, and then use Fibonacci as a way to figure out where to get in. So there is a pattern that I call the fake out correction. And let me show you the many ways this thing that's really called a flat correction can fake out a trader. So if we look at the pullback from the all-time high last Thursday, that ended up being an A, B, C, 3-wave move. Those are counter trend moves, right? And so particularly once we start to bounce enough that we have left the prior decline looking like a 3-wave corrective move, we start to think we're heading back up. And in fact, we got so close to that all-time high. You come in here yesterday, you think we're going up. But if you dig into that bounce from lows into yesterday's high, it too is one of these up, down, up, 3-wave corrective moves. And that's the first way that these counter trend moves or that these flat corrections are fake outs, because these flat corrections always start as a 3-wave move down, then they have a 3-wave bounce, and that 3-wave bounce needs to get most of the way to this prior high as this one does. It's not going to be a small one. Sometimes it's even allowed to go above here, adding even more to the fake out and making you think we're heading back up. And then from there, the rug gets pulled in the C wave of this flat correction, which is always going to be a trend move. And this certainly was a trend move, a sharp move. And even if you don't use Elliott wave, you might be fooled into thinking that this is the start of something bigger to the downside. After all, it was pretty impressive and showed that folks were intent on selling. So you really needed to see the corrective move down into this low and the corrective move back up that retraced a significant portion of the prior decline to prepare yourself for this sharp move, but also the dramatic recovery that we had today. And so while I said that these flats are some of the more intricate parts of Elliott wave, and they do often give traders some trouble and turn people off to this Elliott wave idea, the reason they're part of this Elliott wave model is that this is a game that markets actually play, and it is far better to know the market's bag of tricks than to ignore it. Now, from a Fibonacci perspective, when we get this leg down the C wave, this circle C wave, to finish a flat correction, it often has proportionality to the bounce that preceded it in this B wave. So the proportions downward that we typically look to are the four shown here, either equal to the B wave up, right, which would take it right back to this prior low, 127.2%, 138.2%, and 161.8%, which was closer to where we actually finished off. And then we also can look at the overall function of the decline and what it's retracing. I don't have a good feel for that and where we are in the overall progression of the market, but it could be that it was retracing this prior 5-wave move up. And if so, we had some levels that clustered with. There was the 61.8% retrace, which clustered at the 127.2% level. That was the first level that I was looking at. And this level near the low was the other one that I was looking at. And then favoring the idea that we would recover here today as we actually did. So that was why I was looking to get long, and we were all looking together for long opportunities in the futures in the Voodoo Mastery Room here on Thursday afternoon. And so far, holding on to those through the day today has worked out well. Now, one of the important things to know about flat corrections is at the end of the day, they are still corrective moves. And therefore, it's my expectation that because this pattern looks corrective, which is synonymous with counter trend, we can expect, or at least I'm expecting, that we will continue to new all-time highs. I'm not sure how far up, but for the moment, I am still focused on the upside until we see something different. I hope you found this useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.